What is going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos is provide you some upcoming events, some upcoming earnings in this next week to get you prepared for the week. If that sounds like something you're interested in, consider subscribing as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, there is a lot to unpack about what is currently going on, but first and foremost, as always, we got to pull this bad boy up. As you can see, there really isn't a lot of events this week. But we need to do before we get started is to recap last week. Now, what was important from last week? Last week we had the FOMC meeting notes, which were extremely insightful to an extent because there was a lot of essentially premature celebration from the Fed in that last monetary policy. Now, this is before we got the next core and before we got the PPI and the PCE, which are alarming. Yes, extremely alarming on the inflation that is starting to creep back up. Now, there's a couple things you need to understand here. The things that I have been talking about are starting to show, are starting to become more true. You can see what is actually happening. Now, you have to understand that there's been um, changes in these reports to try to prevent panic. And so these revisions that have been happening, first of all, the last core inflation should have been a lot higher than 6.4, but it is showing you now that it is sticky at 6.4. We have barely dropped at essentially at a historically fast pace of increasing rates. That's one. That's not a good. It's definitely not a good sentiment. And then you had the PPI that came in over a week ago, about a week and a half ago at this point, and that was hot. And then you had FOMC, which, again, in my opinion, there were still some members that wanted a 50-point basis move, but the majority of people went with a 25, again, celebrating early. And then now we're starting to get hot reports. And then PCE came in, and we just absolutely crushed it, right? We have another horribly bad inflation report. And understand that the Fed did point out that services and housing and food, yeah, they're still very high, and they don't know how they're going to get those down. Uh, the objective of the Fed here is to kill demand. And by killing demand, they continue to increase rates so that essentially, jobs, they can't hire, right? They can't start any new kind of projects. They can't expand. They can't do any of that stuff. And then wage growth, right? Wages aren't keeping up with inflation by a lot, right? We're at 6.4 still. And then you have the Fed on top of it increasing rates to make it to where affordability for housing is extremely hard. You have to have multiple jobs. You have families, uh, that model that used to exist essentially. It does more so overseas, but not so much more in the US. But families would live together to essentially absorb a lot of that cost. Nowadays, it's more so you need to be independent. You need to own all your own things. Now we're resorting back to family units need to be getting closer together, living under the same roof because of the fact that inflation is getting so high that people just can't go to. You can't go to a job that's not going to pay you more than inflation. And that's why you're seeing a lot of people just aren't going back to work or doing remote work because they can't afford to be driving an hour both ways on top of what is currently with inflation and living expenses just in general. So being said, that's what we are fighting, something we've talked about since last year. And again, the manipulation of the reports to try to adjust, to try to hide that. Yes, we're all adults here. I totally get that. But the problem being is that most adults can't handle it. And I think we tend to forget that, right? There's a lot of adults that are on medications, right? That can't handle normal everyday stress. And so you do not want to be pushing the fact that stuff is really bad and you want to try to provide hope. Again, if you want to control the masses, you have to provide hope. And this is why you're getting all these adjusted reports to try to reflect some sort of positivity. But again, the problem being is that it is now starting to show its ugly face, inflation, because of the fact that you can only cut so much out. And they're going to adjust the PPI, the PCE. If they can adjust it more, they will try to do that as well. But you have to understand that the Fed has also been exposed a lot to the stock market, right? And understand that they've been doing a lot of trading. So they're well aware of what's going on in the stock market, insider trading, right? So they're well aware of what's going on. So they don't want the market to crash either. But the problem being is that it's unavoidable. Things are in a very bad state and they will get worse because of this, essentially these job reports that are giving false information because people are having to work multiple jobs to keep up with the rate of inflation. Then understand we're getting hot. China has not opened yet. When that demand comes back, right, we're trying to kill demand. When that demand comes back, it's going to be an issue. And yes, globally, it's going to cause us problems as well. So we have to keep that in mind. And things have to get much worse before they get better. Again, if we want us to get into this phase threes where they start actually laying off rates, things have to be very, very, very bad. And right now, they aren't bad enough. We can pretend that things are okay, but they're not. And we realize that, and more job losses have to occur before things get better. I'm hearing of even more job losses coming down the pipeline, and I'm seeing more job losses each and every day, personally and personally, I know people that are going through it, and also I'm seeing it in the headline news, massive layoffs from more corporations. And so, being said, last week is just emphasizing a lot of the things that I talk about on this channel. That things are getting bad and they're starting to show their face. Q3 or Q2 and Q3 of this year are going to be some really, really nasty quarters. You're going to start to see it even more when we start reporting earnings for this quarter. And then you're going to see it even more so Q2 and Q3. And at some point, something is going to break, right? This is what happens. We've never been through a cycle where we've printed 40% of the money supply. And it's going to get extremely nasty. The way the market is moved like it's never moved in history because of the massive amount of money printed. So you're going to get a lot more volatile moves. And so we have to wait and see. And this is why policies and regulations are put in place after like 2008, right? So we're going to see what the true impact of what this is going to be. Right. And so we're in a debt system. So all the fixed rates, people that don't have fixed rates on credit cards and the debt that carry over each and every month, you're getting charged more as these rates go up as well. So understand that a lot of people are projecting, or the big bank heads of the bank have been essentially projecting around that 5 to 5.25% for rate increases. If we blow past that, institutions that have bought up tons of homes over the pandemic because they thought it was a good investment, it's going to be more cumbersome if they continue to hold that investment. And so you're going to see a point where they're going to flood the market with houses at essentially a very cheap discount because they're trying to get underneath that essentially that asset class. And then that's going to put what the majority of people hold their wealth in, and they're trying to liquidate just to stay above water. They're going to have to sell at a much discounted rate than what is expected or what they're expecting. And so you have to be mindful of that. And yes, some houses are still selling quickly, but that hasn't happened yet. When these institutions feel like at this point, we need to get rid of this asset class. And a lot of them have been doing that. You've seen that with Redfin and a bunch of these other corporations that have flipping businesses, right? They got rid of them because they were just chewing up money left and right. And you're going to see, especially with these big corporations, like I said, BlackRock has been buying a ton of houses. When they turn around and start trying to liquidate these homes, that's going to put the average consumer in a pinch, and they're going to be in trouble because what they're assuming they could sell their house for, they're not going to be able to do that. And so, being said, leading all up to what we're going into this week, there's not any big events going on this week. As you can see, I don't have anything really listed here. Still got the jobs every Thursday. Jobless claims come out on Thursday. I'm more so concerned about next week when we get non-farms. But right now, again, there's no really big events. Yet, as you'll see, I can jump down to the bottom here. If you've been paying attention at all to this watch list, this is essentially what's been priced in on options. It's increasing. Why do we have a non-big event week and expectations for the market is increasing? This could be more so because of the fact they're trying to price in more this week than last week. There was bigger events last week than this week, but the problem being is that the PCE was extreme. It was way out of expectation. It's extremely hot. That's the problem. It's leading up to the fact that the next core is going to be bad, and if that core is not below 6 or below, you're going to draw panic from the Fed. That is what the market is concerned, because then they could potentially go back to a 50-point basis move. The market is slowly pricing in a 50-point basis move on each data set that's coming out, and it's blowing essentially these hot reports are trying to price in a 50-point basis move. Now, I think a 50-point basis move would land us around the 3,800 again. But again, being if that report is even higher than that, depending where we land, you can draw even more panic, because maybe it's not a 50-point basis move. Maybe we have to go back to a 75-point basis move. Maybe we have to add another rate increase that is not essentially priced in, right? There was way too much stuff. Okay, well, the market's going off of this essentially projection that, okay, well, we're only going to have 2 more rate increases. Then we're going to hit phase 2. We're going to stay flat, and and inflation is just going to go away. It's not the case. You have to be adjustable, and that's what the Fed's been trying to say. But the problem is that Powell himself was even getting somewhat dovish, and that's what the market was feeding off of, is this dovishness. Now we're going to get essentially blindsided. The market will essentially get blindsided, but not really. Right? Like if you were paying attention to the things that I've been talking about, you know that it's not what's going on, and that things are going to collapse. How bad are we going to actually have a crash? I don't know. It's not saying we can't drop 100 points or 150 points in the next day or two, right? That can happen very easily, especially with what is essentially feeling in the background here. So with that being said, where does that put us? That puts us in a situation in which we could potentially push up just because it's kind of a non-event week leading into non-farms, which is essentially going to lead into our next core, a lot more projections on what they figure is going to happen in the remainder of the year and into next year. Again, I want to reiterate that they thought that that 2% that we were going to hit was supposed to be July of next year. Now they're projecting it 6 more months out. So that is a huge problem because that means rates will have to continue to increase until things can chill out for a bit. We're going to need a bigger chunk of drops before things can start being settled. And this is a big problem too. And yeah, a lot of people talk about, well, rates need to stop being increased in like demand's just going to go away. The problem being is that spending is still very high. And so as soon as you let off the gas, people are going to start spending more. And so that demand and inflation is going to come right back screaming in. And that's the concern. So, with that being said, let's go over what we got. Like I said, this week, no big events. Again, we're really kind of concentrating on core for the 14th. We also got essentially non-farms next week, so we're kind of leading up to that. But this week we still have earnings going on, something I've talked about. These particular earnings, again, not going to be super pivotal, but they're going to give you, as far as the stock market is concerned, but they are very insightful of what the current situation that we're talking about. We have Target, we have Lowe's, CRM, Avago. These two Avago services might actually do very well. CRM might do very well. But Lowe's and Target are some value plays to look at to kind of see what they're reporting to give you insight. Last time, Target lost like 400 million just because of what they were selling, and we saw what happened with Walmart over the past week. And so Target's going to be insightful to see there. That's on Tuesday, and then Lowe's will be insightful to see. Cat didn't do very well either, which was interesting, right? The demand is dying. We're starting to see this disinflation occurring. We've been seeing it for a while, but it's starting to really hit some of these major ones that were excelling during the pandemic, right? And now the demand is starting to die. And so the problem being, again, is that you have some data that's very misleading in understanding that that's going to it's going to cause a major issue. Now, it's going to be funny if we just come in with another 25-point basis move, because if we do, the market, I think inflation will start running away if that happens. Now, watch list, something I talked about. SPX is up even higher than it was. Not a lot, but it's up a couple more points than last week. We had big data last week that was going to be reported. This week we don't. But again, the concern is that we're coming into this week with digesting the fact that the PCE was hot, and so Tesla still pricing in a big amount, and I think that's more so because of the big move it's had recently into the earnings. So this could start selling off pretty heavy. I think this is why they're trying to price that in. BA is at 7, still very high. JPM is kind of normal. NVIDIA is still very high after its earnings it exploded, so kind of waiting for that to see if it'll start selling off pretty heavy. So these two tech, if you start pricing in a 50-point basis move, these have a ton of meat on the bone to the downside if that does happen. So that's kind of why I want to have that up there. But with that being said, let's kind of look at some technicals here. SPX, again, still trying to hold roughly this 39.69. Again, we finally broke that 4K. We're coming down. Question is how far down are we going to go? And now, because there isn't a lot going on this week, aside from the fear of a 50-point basis move, we could push back up somewhat. We could recover somewhat, maybe to 4K, maybe more so up to this 40-20 mark. Again, we've been playing about 100-point ranges. We've done nothing but essentially sell off. So I'm expecting potentially some sort of bump this week. If we wake up Monday and we just start selling, that means the market is trying to prepare for a 50-point basis move. Again, my target is roughly around the 3,800 if that's the case. We're trying to price in a 50-point basis move. If not, then it's something I keep talking about, reiterating. Yes, the market prices it in, but you have to understand if an example would be, okay, the market wants to price in a 50-point basis move. Let's, for example, say, okay, well, 50-point basis move would be around 3,900. So the market will, yes, it may have hit the 3,900 before, but you have to understand, okay, in this new scenario that essentially restarts every time they come in with new monetary policy, 50-point basis move sits at 3,900. So the market will sell down to 3,900. And once it hits 3,900, it will start recovering into the actual policy. And then if the policy says, okay, well, it is 50-point basis move, then it'll correct back down to 3,900 and then start pushing again. So that's typically the pattern I've been seeing, especially last year when we were getting different points. And so when I see a price to move, yeah, we'll hit a certain marker, but then it will start pushing back up after that. And then again, when it's actually announced, then it will go off of that. So say it was 50-point basis move and they have 25. So we correct down to 50 and they come in at 25. That would make this thing scream back up potentially to 4,100, right? And so that's essentially how the market has been playing out. So um, it may not be accurate, but that's just what I've been noticing, and this is why you get this chop, because you have, well, it's 50 points. So again, 50 points roughly, I think, is around this point. Uh, this 3,800 mark, I think, is roughly where 58 points would be. And then if it's at 75, then you're back down here at this level, could potentially go back down at this 3,600 if that's the case, if we're talking about 75. And I think that's very much a strong possibility because the market will be blindsided by another 75-point basis move and wasn't expecting that. And so it could lead to even more fear, but we'll see what happens there. Again, I think my target for this year is 3,200. I think it's the worst of it. Really depends on how things play out, but I think that's what we're looking for, in my opinion. I've been talking about this for a couple months now, that I was waiting for that second leg, and I think it will be around 3,200 is what I'm looking at. But we'll see. We'll see where we go from here and go from there. But with that being said, and something I've talked about, and I brought this up during the week, and I know most people probably only watch the weekly update, but I talked about this rally here, which was considered one of the most hated rallies last year. This was a 692 96-point move, and then being said, he turned around and had a 858-point move down after that. And I think at this point, you could probably say that we are in that same potential position, up 720. What's the next down move? Do we get 850, 800? 800 would 850 would put us roughly around 3,300. 800 would roughly be that's maybe 3,400. So I think that's very much a strong possibility. I think we will be heading down this direction at some point. 34, 32. I'm thinking 32. Just because I think there's going to be more of a catalyst that's going to play out. And so it's going to add a little bit more to that. Again, something I talked about going into last year was a recession will typically be anywhere around 42% in general. So if we even started from the peak of last year, and I've said roughly the average is what, 42. So you're looking roughly around 2,700. That's just an average recession, right? You can't rule anything out. Yes, it could be more or less, but the problem being is that we historical level, we're dealing with a historical time, 40% of the money supply. I know you've heard it multiple times, but it's a very strong possibility that it could happen. We could potentially see 2,700. Again, it's what is feeling the downside, but we have to see. I know even Kathy Woods talks a lot about innovation that could get us out quicker. Yes, but you're also doing a lot more bigger things, right? The Fed is printing 40% of the money supply. That's not something that's small. That's going to cause bigger moves in the market. And so I wouldn't be surprised if some event occurs, whatever that is, and you still have Russia and China and everything going on with them, that could potentially wake up and this thing potentially sell off. Something else to consider as well this week is that Jimmy Carter is in poor health. If for some reason he passes this week, the market's going to be closed for that day. So be mindful of that, and that will absolutely obliterate any options you may be holding. So you have to be very careful of that this week as well. So something else to consider. Now that's market. Like I said, I think we could potentially push up to roughly the 40.28 this week if we can. If we're still holding down, maybe we play this 20-point range here next week. If we want to go lower, we need to break that 39.40, and then we can dip back down to roughly that 3,900 here. That's kind of what I'm looking at going into next week. So the dollar, let's take a look at that. This is concerning for the bulls. This is what I've been saying. We are back over 105. If this thing, if we open up on Monday and this thing remains over 105, we're going to see a new high on the dollar. And it's something I've been talking about. Things are just too bad to think that we're not going to continue to go down, at least for the next 6 months. After that, I think we need something to break. We need that major event that's going to cause the Fed to say, okay, well, now we should start taking off rates. And we haven't seen that yet. And be mindful, that's what I've been injecting and what I've been talking about and what I want to see first. And before I can believe a true recovery is in the cards. So Bitcoin starting to sell off towards the end of the week. If we start getting a heavy catalyst, this thing might start really coming down pretty hard. Something I talked about is Bitcoin going to hold as a hedge for inflation? I don't know. Like I said, when there's panic, everything's going to look the same. So this thing just might start selling off with everything as well. So really watching that. Needs to hold the 22K mark. If it can't, it's got the 21K mark. If that breaks, you got a gap fill here down to 19,600, and then potentially back down to 15. I'm actually thinking we're going to come back down at least 16, if not lower than that. That's just being mindful on the current market sentiment and what's going on. Tesla chop fest galore. It is consolidating like it wants to run more, but again, a 50-point basis move comes in. I still think this thing is going to get back down to 140. Question is, it going to go lower? I think a lot of people were talking about Tesla's way underpriced back here at 100. Could be true because of the fact that Elon was just selling so much that it added to the pressure that could potentially have caused this 100-point drop here down to 100. But I think this thing will correct, I think, back down to 160. It's just going to take some time. You had this parabolic move and people got excited. Now people are waiting for the next one to go up. So just be mindful of that. But again, I think it's just going to naturally correct and start selling off here. It's just going to take time. NVIDIA, same thing. It has a huge gap here to fill between the 228 and the 212. If this thing can give out at the 28 mark here, you're going to get a huge sell off here. So kind of watching that this week for potential downside if the market wants to sell. Bulls, you want this thing to break above 236 and continue to push from there. But again, very overextended move here. I don't really see you getting much more out of this. You might get a little breakout and that will be it, and it will just die off. Again, this is not healthy. This is not going to sustain the stock moving like this. So just be mindful of that. BA is finally giving up. It's finally broken that 203 mark. If this thing starts coming down, it has a lot of weight and will start pulling the market down. So as strong as Tesla and NVIDIA are, if BA and the banks roll over, it's pretty much it. It's just going to be a matter of a couple of days before big tech starts rolling over. You got the 187 support. You also got the 177 support. So watching those. I know I'm talking about a lot to the downside, but I don't see this thing after this parabolic move like this thing to continue to just keep running. Banks are still holding magically. So 143, you need to break out, go higher. If this thing starts giving out, your support is 131, and then you got a huge drop down to roughly the 122. So you have to watch that as well. GS, same thing. You need this thing to break over 386, but it needs to hold 342 if you want this thing to not give out, or else again, same thing. You got this huge parabolic move. It has corrected some because of comments previously over the past couple of weeks. So it has corrected a little bit, but I think you could still dive back down. I think at least at 300. I think this thing could easily correct back down. But if we really start selling off anyway, it's not going to matter. Could be under 300 again. I think this thing could easily be under 300 again. But that's pretty much it. This video has been pretty long, so I'm going to end it there. Leave your comments, what you think your thesis is. I know this video is long, but there's a lot of information that needs to be get out, and that's why these weekly updates need to have more information in them, because during the week a lot of stuff happens, and then you kind of at the end of the week kind of digest what happens and then project what could potentially happen into the next week. So if you do enjoy these videos, please go ahead and drop a like button so I know you are there and enjoying the videos. And aside from that, have a great one, and I'll see you guys later.